Many millionaires and even billionaires have made their money through real estate investments. Real estate investment provide both long-term capital gains and regular rental incomes. However, many young investors prefer to stay away from real estate investments apart from their residential home or personal office. There are many reasons why these investors prefer to stay away from real estate investments. 1. For most investors, including me, it is just too expensive to purchase even one prime real estate property such as commercial office space in BKC Mumbai or luxury residential apartment in London or New York. 2. Even if you can afford to purchase one such property, it would likely occupy a large portion of your investment portfolio, leaving you exposed to risks associated with lack of diversification, such as what if the construction of the property does not finish on time, assuming it is a new property? What if there are legal or extravagant maintenance or repair costs that you did not anticipate, assuming it is an old property? What if you do not find a good tenant? Or what if the cost of the property does not grow at a rate you anticipated due to factors outside your control, such as cancellation of some big projects in that area? 3. Investors usually prefer to invest in real estate in a region where they reside due to lack of sufficient exposure to reliable information about other real estate markets. Hence, if no attractive opportunity is available to an investor in a region where they reside, they decide not to invest in real estate market. In this video, I am going to talk about a way to invest in global real estate markets, regardless of how small or large your portfolio size is, without the risk of lack of diversification through real estate investment trusts, REITs. So let's get started. So, what is a REIT? A REIT is a company that pools the capital of numerous investors to own, operate, or finance income-generating real estate. They are essentially mutual funds of real estate market. Now let's discuss some advantages of REIT. 1. REITs are managed and operated by experts in real estate market who do all the research on your behalf before investing in real estate investments in the form of equity, debt, or both. They also manage these properties, which enable individual investors to earn dividend from their real estate investments without worrying about all those things at relatively modest fees. 2. REITs invest in several properties in one or more specialized sectors, such as office spaces, malls, hotels, residential apartments, hospitals, or warehouses. They often spread their investment across a region, country, or even globe, which minimizes the risk presented by lack of diversification, regardless of your investment amount. 3. REITs are considered liquid investments, unlike real estate properties, as you can buy and sell them instantly at prevailing market rates, unlike real estate properties. 4. REITs in most markets are legally required to invest 75 to 80% of their total portfolio in properties ready for possession, protecting large chunks of investors' money from being parked in potentially risky projects. 5. REITs in most markets are legally required to distribute 90% of their total net income in the form of dividends, unlike other companies which might decide to reinvest all the income in future projects which may fail. But how can you invest in REIT? Most REITs are traded publicly on different stock markets such as BSE, NYSE, Nasdaq, Euronext, or NZX. If you're interested in investing in REITs on foreign stock market, please check our previous video which talks about investing in foreign stock markets, whose link is right here and also in the description below. you can invest in individual REITs or in exchange traded funds, ETFs, that invest in multiple REITs. If you are not interested in investing in stock market, you can invest in mutual funds that invest in REITs. Now, all of you must be wondering how to decide whether to invest in a particular REIT or not, right? 1. Obviously, before anything else, you should check the portfolio of those properties that a particular REIT has invested in and also the occupancy rate of those properties. Higher occupancy rate of high quality properties definitely indicate an investment that is more attractive. 2. Although past returns does not guarantee future success, you should check the returns a particular REIT has produced over past 3 to 5 years to get an idea of expected returns. 3. Stock markets often under or overreact to different events. This creates arbitrage opportunities, especially in case of REITs, as underlying asset that REITs hold is usually stable. For example, stocks of many REITs tumbled by more than 50% a year ago due to events we are all familiar with. But the value of properties that these REITs held did not tumble by 50%. Also, the occupancy rate of these properties was higher than expected in past 12 months. As a result, the stocks of these REITs jumped by more than 60% in past 12 months. Now let's discuss tax implications of REIT investments. To avoid making this video too long, I am going to discuss tax implications for Indian investors only, as majority of our viewers are currently based in India. But feel free to let us know in comment sections where are you currently based if you would like to know tax implications of REITs investments in your country of residence. You would have to pay either 10% or 15% capital gains tax on investments in REITs in India, depending on whether you held it for more than 3 years or less than 3 years. There is no tax on dividend earned from REITs, provided the particular REIT pays 30% corporate tax as per old tax regime. However, you have to pay tax on dividends earned from REITs if the particular REIT pays 22% corporate tax as per new tax regime. We discuss interesting investment opportunities on this channel every single week. So, if you're new to our channel, please consider subscribing to get notified whenever we upload a new video. Also, don't forget to smash that like button and share the video with your friends and family. Thank you.